everyone, welcome back to the channel. I'm so excited you're joining me today because we're diving into something that can literally transform your financial future. We're talking about smart money habits that will change your life in 2025. Look, I know talking about money can sometimes feel overwhelming or even boring. But trust me when I say that these strategies have the power to completely revolutionize your relationship with money. Whether you're struggling with debt, trying to save for a big purchase, or simply want to build wealth for the future, the habits we're covering today are going to help you get there. Before we dive in, if you're new here, don't forget to hit that subscribe button and ring that notification bell so you never miss out on our latest financial tips and strategies. And if you find value in today's video, smash that like button. It really helps the channel grow. Let's get started with these life-changing money habits for 2025. The foundation of any successful financial strategy starts with a solid budget. But I'm not talking about those restrictive budgets that make you feel deprived. I'm talking about creating a comprehensive spending plan that gives every single dollar a purpose. Here's how to do it effectively in 2025. Divide your income into 4 key categories. First, allocate up to 70% for spending. This covers all your essential expenses like housing, utilities, groceries, transportation, and yes, even some discretionary spending for those little joys in life. Remember, a budget isn't meant to eliminate fun, it's meant to help you spend intentionally. Next, dedicate at least 10 to saving. This isn't just for emergencies, though that's certainly important. This category also includes saving for future needs like a down payment on a house, a new car, or that dream vacation you've been eyeing. Having dedicated savings prevents you from dipping into emergency funds or going into debt when these expected expenses arise. The third category is investing, which should take up at least another 10 of your income. This is how you build wealth over time. Whether it's through retirement accounts, stocks, bonds, real estate, or other investment vehicles, putting your money to work is essential for long-term financial success. In 2025's economy, investing wisely is more important than ever before. Finally, consider allocating at least 10 to giving. This might sound counterintuitive when you're trying to build wealth, but contributing to causes you care about fosters a sense of fulfillment and abundance that actually improves your relationship with money. Plus, studies have shown that generosity can lead to greater happiness and life satisfaction. This balanced 70-10-10-10 approach ensures your money serves both your current needs and future goals. It's flexible enough to adapt to your personal situation while providing structure to guide your financial decisions. Now let's talk about something that's holding many people back from financial freedom: high-interest debt. If you're carrying balances on credit cards with 15, 20s, or even 25 interest rates, you're fighting an uphill battle with your finances. In 2025, smart consumers are getting strategic about debt elimination. Start by listing all your debts, noting the balance, interest rate, and minimum payment for each. Then, while maintaining minimum payments on everything, direct extra funds toward your highest interest debt first. This approach, known as the avalanche method, saves you the most money in interest over time. Another effective strategy gaining popularity is debt consolidation. This involves combining multiple high-interest debts into a single loan with a lower interest rate. In 2025, there are more consolidation options than ever, including personal loans, balance transfer credit cards, and even digital lending platforms offering competitive rates. Don't overlook the power of negotiation either. Many credit card companies are willing to lower your interest rate if you simply ask, especially if you have a history of on-time payments. A 5-minute phone call could save you hundreds or even thousands of dollars. Here's a creative approach that's trending in 2025: using cashback sites and rewards programs strategically, then directing those returns directly toward debt repayment. It's like getting paid to pay down your debt. Apps are making this easier than ever to track and implement. Remember, eliminating high-interest debt isn't just about freeing up monthly cash flow, though that's certainly a benefit. It's about stopping the bleeding of your hard-earned money to interest payments and redirecting those funds toward building wealth instead. Life is unpredictable. That's something we all learned the hard way in recent years. Job losses, health emergencies, major home repairs, or unexpected economic downturns can happen to anyone at any time. That's why building a robust emergency fund is more critical than ever in 2025. Financial experts typically recommend having 3 to 6 months' worth of essential expenses saved in an easily accessible account. This isn't money for vacations or new gadgets, it's your financial safety net that provides peace of mind and stability during challenging times. Start by calculating your monthly essential expenses: housing, utilities, food, transportation, insurance, and minimum debt payments. Multiply that number by your target, let's say 4 months, and you've got your emergency fund goal. If that number seems overwhelming, remember that you don't need to build it overnight. Start with a goal of $1, then work your way up from there. Where should you keep this money? In 2025, high-yield savings accounts are offering competitive interest rates without sacrificing liquidity. Some specialized emergency fund accounts even offer incentives for maintaining your balance while still allowing penalty-free withdrawals when true emergencies arise. The key to successful emergency funding is to make it accessible but not too accessible. It should be separate from your checking account to avoid the temptation of dipping into it for non-emergencies. But it shouldn't be locked away in investments that are difficult to liquidate quickly. Having this financial buffer changes everything. It turns what would be disasters into mere inconveniences. It gives you options when life throws curveballs. And perhaps most importantly, it reduces financial stress, allowing you to make clearer decisions rather than panicked ones during difficult times. In 2025, one of the most valuable investments you can make isn't in stocks or real estate, it's in your financial knowledge. The financial landscape is evolving rapidly, with new investment opportunities, changing regulations, and technological innovations reshaping how we manage money. Commit to ongoing financial education. This doesn't mean you need to get a finance degree, just dedicate a few hours each month to expanding your financial knowledge. Subscribe to reputable financial newsletters, follow trusted financial experts on social media, or read one personal finance book every quarter. Podcasts are an excellent way to absorb financial knowledge during your commute or workout. In 2025, there are specialized podcasts covering everything from beginner budgeting to advanced investment strategies, making it easier than ever to find content that matches your current knowledge level and goals. Don't underestimate the value of community learning either. Online forums and local investment clubs provide opportunities to discuss financial strategies with others. Learn from their experiences and gain different perspectives. If you have children, teaching them about money management early on is one of the greatest gifts you can give them. In 2025, there are excellent age-appropriate resources for kids as young as preschool age. Research shows that money habits are formed as early as age 7. So, starting these conversations early instills responsible financial habits that last a lifetime. Remember, financial literacy isn't just about learning complex investment theories, it's about understanding your own relationship with money, recognizing financial pitfalls, and making informed decisions that align with your values and goals. Let's be honest, saving money requires discipline, and human willpower isn't always reliable. That's where automation comes in as a game changer for your financial future. In 2025, the technology for automating your finances is more sophisticated and user-friendly than ever before. Start by setting up automatic transfers from your checking account to your savings accounts. Most banks allow you to schedule these transfers to coincide with your payday, ensuring that you save before you have a chance to spend. But don't stop there. Automate contributions to your retirement accounts as well. If your employer offers a 400 ONIC or similar plan, contributions are typically deducted directly from your paycheck. If you're self-employed or want to contribute to an IRA, most financial institutions allow you to set up automatic monthly contributions. The beauty of this set it and forget it approach is that it removes the emotional aspect of saving. You don't have to make the decision to save every month, it just happens automatically. Over time, you'll adjust to living on what's left, and meanwhile, your savings and investments grow steadily in the background. Some of the cutting-edge financial apps in 2025 take automation a step further by analyzing your spending patterns and automatically moving small amounts of money to your savings when the algorithm determines you can afford it. Others round up your purchases to the nearest dollar and invest the difference, making saving truly effortless. By automating your savings, you're essentially paying your future self first. This single habit has transformed countless financial lives because it harnesses the power of consistency and compounds its benefits over time. Money remains one of the last taboo topics in many households and relationships. In 2025, breaking the silence around finances is becoming recognized as a crucial step toward financial well-being. Start by fostering open money conversations with your partner or spouse. Schedule regular money dates where you discuss your financial goals, review your progress, and address any concerns. These conversations shouldn't be confrontational but collaborative. You're a team working toward shared objectives. Extend these conversations to your children as well. In age-appropriate ways, involve them in family budget discussions. Explain your financial decisions and give them opportunities to practice money management through allowances or saving for their own goals. Even among friends, breaking the money taboo can be beneficial. You don't need to share specific salary numbers to have meaningful conversations about saving strategies, investment approaches, or financial challenges you're facing. The benefits of open money conversations extend beyond practical financial planning. Research shows that financial transparency reduces relationship stress and builds trust. Many couples report that regular financial check-ins actually bring them closer together and reduce money-related conflicts. In 2025, some forward-thinking companies are even fostering more open compensation discussions and providing financial wellness programs. Recognizing that employees' financial stress affects workplace productivity and satisfaction. Remember, the goal isn't to compare or compete, it's to learn from each other, provide mutual support, and ensure everyone is aligned on shared financial objectives. By bringing money matters into the light, you remove much of the fear and anxiety that often surrounds them. Imagine setting out on a road trip without a destination in mind. You might enjoy the journey for a while, but eventually you'd feel directionless. The same applies to your financial journey. Without clear goals, it's easy to lose motivation and focus. In 2025, effective financial planning centers around setting SMART goals: specific, measurable, achievable, relevant, and time-bound. Instead of saying "I want to save more money," a SMART goal would be "I will save $10, zero for a home down payment by December 31, 2025, by setting aside $833 each month." Start by defining your short-term goals under 1 year, medium-term goals 5 years, and long-term goals over 5 years. Short-term goals might include building your emergency fund or paying off a specific debt. Medium-term goals could be saving for a home down payment or funding a career change. Long-term goals typically include retirement planning or funding your children's education. Once you've defined your goals, break them down into actionable steps. If your goal is to save $10, zero in a year, that means setting aside about $833 each month or $192 each week. Suddenly, that big goal feels more manageable when divided into smaller chunks. Track your progress regularly and celebrate milestones along the way. Visual trackers can be particularly motivating, whether it's a simple spreadsheet, a goal tracking app, or even an old-school thermometer chart on your refrigerator. Don't forget to periodically review and adjust your goals as your life circumstances change. Got a raise? You might accelerate your timeline or increase your target amount. Facing an unexpected expense, you might need to extend your timeline slightly. Having clearly defined financial goals transforms money from an abstract concept to a practical tool for creating the life you want. It gives purpose to your budgeting and meaning to your sacrifices, keeping you motivated even when the going gets tough. In 2025, your credit score remains one of the most influential numbers in your financial life. It affects everything from the interest rates you'll pay on loans to your ability to rent an apartment or even get certain jobs. That's why regularly monitoring your credit score is a non-negotiable habit for financial success. Fortunately, accessing your credit score has never been easier. Many credit card companies and banks now offer free credit score monitoring as part of their services. There are also numerous reputable apps and websites that provide not just your score but detailed explanations of the factors affecting it. Don't just check your number, understand what's influencing it. 5 major factors determine your credit score: payment history 35, amounts owed 30, length of credit history 15, new credit 10, and credit mix 10. Knowing these weightings helps you focus your improvement efforts where they'll have the biggest impact. In 2025, sophisticated credit monitoring services are providing personalized recommendations based on your specific credit profile. These AI-powered tools can simulate how different actions like paying down a specific debt or applying for a new credit card might affect your score before you take that step. Regularly reviewing your full credit reports, not just your score, is equally important. Check for errors or fraudulent accounts, which are more common than you might think. In 2025, with increasing digital transactions, being vigilant about your credit report is a crucial defense against identity theft. Remember that improving your credit score is a marathon, not a sprint. Consistent positive behaviors over time, like making payments on time, keeping credit card balances low, and avoiding applying for too much new credit at once, will gradually but surely strengthen your credit profile. A strong credit score opens doors to better financial opportunities. Lower interest rates can save you thousands on major purchases like homes and cars. while better credit card offers can provide valuable rewards and benefits that actually put money back in your pocket. In our age of one-click purchases and targeted advertising, mindless spending has become all too easy. That's why mindful spending, being intentional and present with your purchasing decisions, is emerging as a powerful financial habit in 2025. Start by distinguishing between needs and wants. Needs are the essentials required for basic living: housing, food, utilities, transportation, and healthcare. Wants are everything else. This doesn't mean eliminating wants from your life, it means approaching them consciously rather than impulsively. Implement a waiting period before making non-essential purchases, especially larger ones. For items over $100, try waiting 24 hours before buying. For purchases over $500, consider a one-week rule. You'll be surprised how often the urge to buy fades when you give yourself time to consider whether the item truly aligns with your values and goals. In 2025, some of the most financially successful people are embracing minimalism not as an extreme lifestyle of deprivation, but as a thoughtful approach to ownership. Before bringing new items into your home, ask yourself, will this add real value to my life? Do I have space for it? Will I use it regularly? Could I borrow or rent it instead? Technology can both help and hinder mindful spending. On one hand, budget tracking apps make it easier than ever to see where your money is going. On the other hand, stored payment information and targeted ads can facilitate impulse purchases. Use technology intentionally. Consider removing stored payment information from shopping sites and using browser extensions that block tempting ads. The cost per use perspective is gaining popularity in 2025. Instead of focusing solely on the purchase price, consider how often you'll use an item. A $100 pair of shoes worn 100 times costs $1 per wear, potentially better value than a $20 pair worn only 10 times before falling apart. Mindful spending isn't about deprivation, it's about alignment. When your purchases reflect your true priorities rather than momentary impulses, you experience greater satisfaction and fewer regrets. Plus, the financial benefits of reduced consumption are substantial, freeing up resources for the goals that matter most to you. In 2025, the financial marketplace is flooded with increasingly sophisticated products and investment schemes, many promising extraordinary returns or unique benefits. Yet some of the most financially successful people share a common trait: they stick to simple, understandable financial products. Warren Buffett, one of history's greatest investors, famously advised, never invest in a business you cannot understand. This wisdom extends beyond business investments to all financial products. If you can't explain how an investment works to a friend in a few simple sentences, it might be too complex for your portfolio. This doesn't mean avoiding all sophisticated investments. It means ensuring you thoroughly understand any financial product before committing your money to it. Complex doesn't necessarily mean better, and often the opposite is true. Simple index funds have consistently outperformed many complex, actively managed investment strategies over the long term. Be particularly cautious of financial products with these red flags and usually high-promised returns. Pressure to act quickly, complicated fee structures, or difficulty understanding exactly how the product makes money. In 2025, with economic uncertainty in certain sectors, schemes promising quick riches are targeting vulnerable consumers. Remember that complexity often serves to obscure high fees or significant risks. Before investing, Ask direct questions about all fees involved, both obvious and hidden, and ensure you understand exactly how your money could be lost in a worst-case scenario. The financial technology boom has introduced many innovative products, some of which offer genuine value. But not all innovation is improvement. Evaluate new financial technologies with the same critical eye you would apply to traditional products. Building wealth is typically not about finding exotic investment vehicles or getting lucky with timing the market. It's about consistently applying proven principles, spending less than you earn, investing the difference in diversified assets you understand, and allowing time and compound interest to work their magic. We've covered a lot of ground today, exploring 10 smart money habits that can truly transform your financial life in 2025. Let's quickly recap. Create a comprehensive budget that gives every dollar a purpose. Eliminate high-interest debt to stop the financial bleeding. Build an emergency fund for life's inevitable curveballs. Invest in financial literacy to make informed decisions. Automate your savings to ensure consistency. Engage in open money conversations with loved ones. Set realistic financial goals to stay motivated. Monitor your credit score regularly to unlock better opportunities. Practice mindful spending to align purchases with values. And avoid complex financial products you don't fully understand. Implementing even a few of these habits can significantly improve your financial well-being. The key is to start somewhere. You don't have to overhaul your entire financial life overnight. Pick one or two habits that resonate most with you and focus on those first. Once they become second nature, add another. Remember that financial success isn't just about the numbers in your bank account. It's about creating a life of freedom, security, and opportunity for yourself and those you care about. These habits are tools to help you build that life, one decision at a time. If you found value in today's video, please hit that like button and share it with someone who might benefit. Drop a comment below letting me know which of these habits you're going to implement first, or share a smart money habit that's working well for you. Until next time, here's to your financial success in 2025 and beyond.